Hey everyone, and welcome to Stock Talk on December 6th, and what a crazy day we've had. So let's talk about everything that occurred today, and we'll get through the trends and the technical support resistance lines, of course. Once again, if you enjoy these videos, please hit the thumbs up button. I highly appreciate everyone watching and really talking in the comment section. So keep on doing that. I read all of your comments, of course, and it's really helpful to me. So let's keep that going. And here is SPY on the yearly chart, and what you can see today is initially and for the majority of the day we were fluctuating below my support line of 268, and it was really down here, and it was looking pretty bad early in the day because the Dow started off already 400 points or so off on the futures, and it looks like it was going to be a one ugly day again. But I told the members in the course, and this is what you can get from the course, right? You get the live trading group and so much more. And I told the group, we are at really a support level, and the support level is ranging from around the 263 levels of support level. Why is it the support? Of course, we've had reaction lows in the past. Now, does that mean that it's going to hold this time around? It doesn't mean that it has to hold, but the thing is, a support is of course a support, right? It's a level, or it's a zone where we should expect buyers, but once in a while, let's say 1 out of 5 times or 1 out of 10 times, the support breaks in this case, and then the bottom falls on top of us, and then we go lower. So that was a support zone, and you can see off of this level that we rallied very hard into the end of the day. Now, let me take you to the 1-day, 1-minute chart. I'm sure a lot of people are monitoring what happened today, and you can see the rally really occurred in the last 2 hours, where we started breaking above and then we closed at 269.77. What was interesting, I told the members as well, is we actually effectively filled this gap area, and now we closed pretty much at that point, right? So that's actually pretty nice that we were able to do that. But at the same time, you have to make notice that yes, we rallied up today, but the thing is, can we continue that rally in the next few days? The support definitely held today. That's for sure, and in my opinion, I would look for that to continue in the next few days. Now, tomorrow, can we come back and retrace a portion of the move? We can, but again, the support held today, and I would expect the support to hold off of today's low, and today's low is 262.44. Yes, it is far away, 262.44, given where we are right now, but the thing about this is, if we can hold above that level, I would look for this support to hold until when? Perhaps until the end of the year. So that's what I'm looking for, at least. All right, I want to show everyone also a different chart, show you the IWM. So this is small caps, and the reason why I show you the IWM is because you can see from the IWM, it looks a little bit different from the SPY. It's because we've already retested the lows from the February, the initial major correction down. So here's the low from the February, and we actually came down and almost got to the 142 level. Didn't happen today, but this looks a little different. Why does that look a little different? It looks like we were attempting to break the support. This is another bear flag formation that was in progress, but at the very end of the day, you can see that the bulls did manage to push it higher. So I would expect this to hold, this level to hold in the next few days to next week. Now, if we see something different on the futures tonight, if we see something different starting tomorrow, the first people who will know, well, hopefully you know how to read the charts, right? But also the people in the Discord chat, you guys will know or hear a story from me in terms of where we could be going if we go to the downside. Now, I talked about the upside, right? S&P 500. Do I think that we're going to rally back to the 280 level tomorrow or next week? No. The answer is a big, big no. And I think we will, if we do get towards that area, it should be slower paced. And at least I would prefer a slower pace. Back to the 280 level. But you can see that these candle sizes are drastic, and just be careful, because once you're trading this market, you have to be quick. You have to be agile, because if things are not going your way, you should have a stop ready if you find a valid number and it breaks that number on a whatever closing basis. In my opinion, you should have a stop ready because it's so volatile. We moved $7 from just 262 from the low to the high of the day on the S&P 5, the SPY, right? That's a big, big move. So you don't want to be caught on the wrong side of things. So there you go. Okay, so of course, for me, you can imagine, right? I like when markets move higher because markets move higher. The economy is healthy. I mean, the economy is healthy right now, but generally people want markets to move higher. Yes, we can make money on both sides of the equation, but we want the markets to be healthy overall. So while we do see downside, I would want to expect for this support to hold. Okay. Now, let's talk about TVIX or volatility. So similarly with TVIX or volatility, what you can see is that down here, right, we pretty much got down and filled this gap, and that's where we closed, 46.27. We got probably very close to filling it. We might not have done it completely today. But what was the major theme that we've talked about over and over again for volatility? Look at the 200 period moving average acting as a resistance every single time. And in this case, it was no different. It acted as a resistance level. So what you can see is this correlated well with the S&P 500, right, in terms of support and resistance level. So we'll have to be monitoring. I'm more focused right now on the S&P 500 chart than this chart right now because, yes, we got rejected, but if the markets start pushing lower tomorrow and if we get near the 262, 263, 264 level, that's going to be pretty dangerous. That'll negate today's candle, if you can imagine. So while today was bullish, my point here is, don't chase the trend. Don't chase the trend. And my point here is, if you chase the trend, let me just give you a quick scenario of what happens for, usually, if the emotions get the best of you and you try to chase a trend, you might be successful today, but if you don't day trade out of it, what happens or what will you do if it goes to 262, 263 tomorrow on the S&P 500, right? That's a big question. That's why if you're chasing the trend, you're not getting it at the better price point. And I think it's going to come down at some point and get to that price point again. Okay. All right, so let's talk about commodities. Start with crude oil futures. And the reason I talk about crude oil is from the yearly perspective, crude oil has been in a bear market. And for a good half of today, it looked like it was going to push even lower, right? You can see this candle. It's not really a big tail candle, but you can see a tail off of the candle today that we were still able to close relatively fine compared to earlier in the day. But what can you see from this chart? So you can see that it's gone down, 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 and down, right? And we consolidated near the support level. The support level was around 49.20. These lines don't change, like I said. And you can see we rally off that level just a little bit, got near the 20 before what? Before a rejection back to the downside. So crude oil, in my opinion, can actually go lower, continue to go lower because we're still getting rejected at the 20 period moving average. But also note, what are we noting here? That we're nearing support levels. These are still very strong support levels in my opinion, and this is one of the bigger rallies we've actually gapped up from this day to this day that we've had in crude oil for a while, right? So just make note of that, and while I think it could go a little bit lower, we do have support levels nearby. All right, let's take a look at natural gas. So natural gas is one that, and I've talked about this too, right? It's a little bit harder to see the trend for natural gas. And the reason is, here is the major resistance, right? This is really the prime, in my opinion, shorting opportunity at the resistance, which is 4.858. And we've only hit that a couple of times. Sometimes it was, when we get near it, it was during aftermarket or pre-market hours, so you might have not caught the best price point. But we're getting rejected. But at the same time, what's happening to the 20-period moving average? Still curving up, right? So this is still above the moving average. So you can imagine it's getting squeezed in. what is it preparing to do? It's preparing to make a pretty large move one way or another to the upside or downside. So in my opinion, there's not too much that you can do with this chart. If you look at the 20-year monthly chart, and this is something I've showed numbers as well, 20-year monthly chart, right? Obviously this month just started, so this candle doesn't, the candle that's formed so far doesn't mean too much. But what you can see is at some point natural gas will come down, right? Whether it's at the end of the month or at the start of next month, at some point it will come down. The question is, when. So, you know, just note that we do have resistance levels at 4.845, and then if we move one step higher, if it does start moving higher, perhaps on a natural gas inventory report or whatnot, then it will be at 5.717. Just make note of those two resistance levels because in my opinion, at some point natural gas is going to come down. The question is, when is it going to come down? Not necessarily if it will come down. So there you go. And I think you know there's a pretty okay risk-reward ratio there, but that's something for you to consider if you're looking into natural gas. And finally, /GC, gold futures. Now, gold futures, we can see from yesterday's candle that we popped over the resistance. So if you're trading the futures chart, that was good in terms of, because I talked about futures, gold, it looks bullish. But if you're looking at ETFs such as JNUG or whatnot, it doesn't correlate one-to-one. As a matter of fact, you see JNUG moving lower both of these days, while what's /GC doing or gold futures doing? It's been going higher, right? So my point here being is it's risky going into something like JNUG. If anything, look at JDST, I think. But, you know, here, we're over, still over, so that's positive in terms of the futures chart, over the resistance level of 1242. If we can keep over this level consistently, like what we're doing right now, we are likely to push up towards, first of all, we'll push towards the 200 period moving average. I think that will be a major resistance area to test, 1260. And then, of course, the major resistance line, 1266.7, which is my next target level for /GC. So this looks like it's pushing higher, so pretty good with gold futures at the moment. All right, so I'm going to keep this video just a little bit short. I want to just give everyone both perspectives, right? Here's the deal with like the S&P 500. I know a lot of you are thinking like, Kevin, you know, why do you give me both sides of the equation? Why do you give me both perspectives? Because does that tell me that you know, which direction are you going to pick? The thing is, I give you technical levels, right? Support, resistance levels, and you can do whatever you want with it, right? But for a technical trader, you would buy at what? A support level. You would sell at a resistance area. And for everyone who's watched these videos in the past, I mean, I've had these boxes for a while. I've had these lines for a while. I've had this box for a while. These happen up here, right? So those are more objective levels for you to consider or look at. Now, the big scheme of things on the S&P 500 is a major bear flag pattern. So for those, you know, bear flag patterns, what do? They're likely to play out to the downside. Now the question is, when is it going to play out? You know, and so where's the bear flag? Here's the down leg, up, down, right? So now we could certainly move a little bit higher before that big drop towards the 260 level. That would be our first line, but I think if we do get that big drop, then we could be seeing, here's my red target zone, below the yearly low of 259.92, 252.92, sorry about that, and so that would be around the 250 level on the S&P 500. So that's something to be mindful of. It doesn't have to happen this year, but if it happens, hopefully no one is caught by surprise by then. All right, everyone, thank you so much for watching this video. Again, if you enjoy these videos, please hit the thumbs up button, and I will see everyone. What a wild ride, right? I mean, do you all like volatility? I think volatility, the problem with volatility is if you get the trend right, it can help a lot of people because it moves quickly, right? But you know, if the trend, if you're not going with the trend, and it's difficult to trade, especially it's difficult to trade in these environments when S&P 500 is moving, you know, SPY is moving $7 up and down like every day. it can be difficult for newer traders to trade in this kind of environment. So for newer traders, my suggestion, in my opinion, is to really trade, on like just use virtual money and see if you can actually consistently do this over and over again. If you can get good practice and you can consistently make some money off of this, then you can perhaps ease yourself into the real world trading. But by no means, in my opinion, if you're new, you just started, emotions might get the best of you, especially if you put in quite a large amount of capital. So, all right, everyone. Thank you so much for watching this video. See you guys next time. Happy trading.